Welcome to Bears in Exile. Today is July 19th, and it is the market overview with the Dow, SPX, VIX, XOI, TNA, UUP, FXE, GLD, and SLV. So, we finally had our move up. We were saying that we needed a rest, catch our breath, and a move up, and here we are. So fantastic. Um, Obviously, we had an extremely strong day, um, and I'm going to look at this in the context of Guppy, which is came through the bar from below, got up high, came down, touched it, and now we're going to see if we bounce off. Certainly, with a day like today, the short-term moving averages are pointing up. The bar is expanding, bullish bar. Um, but beyond that, what do we see? We see that CCI is ticking up. We see that the stochastic is ticking up. We see that the RSI is just out of overbought conditions, so it can move up. And look at that. The MACD has bounced off of its trigger point, and the histogram is ticking back up. So this is just absolutely wonderful. We were waiting for this, and now in the context of all the candles, it really does make sense. Inverse hammer, inverse hammer, inverse hammer, spinning top, hammer, and now we have a bounce. So it certainly took longer and was a little bit nail biting, but at least it got here. Now, whether it continues on is the real question. The pattern and the short-term moving averages would indicate that that would be the case. The candle also indicates that would be the case as it is a continuation candle, big, strong bar. But on the flip side, this was the biggest one-day move in months. So pause is definitely possible after a move like that. But if sentiment is changing, then fantastic. Let's keep going. And going on to SPX, really the same as the Dow. I mean, it was more extreme. It came down more. It went through the flatline bar. But if we look at it overall, came from underneath, came up high, went back for a retest of the bar, and as long as we get complete separation of the short-term moving averages, that is a guppy entry. So all kinds of room to move. We did have the bearish cross on the MACD. At the moment, it looks like it could be a whipsaw. We have not gotten the cross back up, but we shall see tomorrow and the rest of the week. VIX, big gap down. It is a continuation candle, big body, no real shadows or tails to deal with. CCI clicking down, stochastic clicking down, RSI neutral, and MACD histogram getting a tick down with the MACD waiting to take its direction. So this does look like this should continue going down. You'll notice that the target that we talked about a few days ago with our first down tick into the mid 18s has not yet been hit. Perhaps we will hit that tomorrow, but tomorrow would be 4 days, and so we'll be looking for that tomorrow. We did have another down tick, yesterday, and that one has almost been met, right at 19, just a hair above 19. So we have 2 ticks to play with, and we will see. XOI, when oil is bullish, the market is bullish. We did have that concern hammer we talked about in last night's video, but would you look at that? It very nice candle today. And one other thing to note is this is bullish engulfing. The surprise, surprise, the close yesterday is exactly the same as the open today, which no running around, so that is nice as well. Going on to TNA, finally had a good move. We were saying that it went up faster, it went down faster than the major averages, and that should the major averages turn around, this one should rise faster. And today it gained $5.30, increase of 6.75% roughly, whereas the Dow and the SPX were up 1.6%. So very nice, very nice. Also, continuation candle still matches the same pattern of coming up and then going back for a test and bouncing off of it. As long as that can be continued, we're good to go. Notice that the middle Bollinger Band is still above us, and if it clears that, we should be in pretty good shape. MACD doesn't have a huge amount of room to go to the upside, but it can go back up there and hang out. So beyond that, just like the Dow and the SPX, at least I am not entirely confident about it getting all the way back up to this prior peak and beating it, or the prior high back here going up and breaking that, but we are interested in the run to attempt that, and as it approaches this level, right about just above 88, actually I'll get right about somewhere between 87 and 88, I'll get somewhat defensive, but should it get that far? I mean, who knows? UUP, we had the inverse hammer we talked about yesterday, and sure enough, it went down today. Not the strongest thing. It is not quite a hammer, not quite a spinning top, somewhere in the middle. This is NDE driven, so as the news plays out tomorrow in regards to the deal that they have on the U.S. debt ceiling, I expect that to have some sort of effect. The indicators are all fairly neutral. We are in the bar. I mean, if it hangs out here, we could go into a double flat line, but we shall have to see. We don't know right now. FXE, we had the hammer yesterday. We have a uptick. Uptick was met intraday today, and we have between an inverse hammer and a spinning top. So somewhat indecisive. Indicators are all mixed, but the MACD histogram is ticking up. So we're going to have to wait and see on this one too. With all the Euro news, this thing really could do anything. So hopefully sentiment is changing to positive with earnings, and this is all going to be ignored at least for a few days. GLD. We were saying yesterday how pretty it was. We had a gap up. We had the solid candle. We've been saying that this one is high, and that eventually at some point it will need to come back for a test of the bar, as that is natural. And what do you know? Today we have a downtick, and it gives us a target right above 152. So we have 4 days for that to manifest. The stochastic ticking down, CCI ticking down, MACD still ticking up, MACD histogram going down, RSI going down. So 152, and this bubble is fixed. And we've been talking about how it's uniform but not wobbly, and that we have extreme separation. Now you really see it. So another thing to be watching, if the fears are going away about the news, then it is natural for this to go down. And SLV, we were saying that it finally was getting a little bit of respect, but that it was wobbly with extreme separation, and we noticed that it was outside the upper Bollinger Band last night with a spinning top. Today we had the down move. We now have the down tick. Down tick gives us a target right at 36.5. So if it gets there, this bubble is fixed, and it can choose to do what it wants to from that point. Perhaps by then the news will shift once again. But there you have it. Very positive day. Would like to see some follow through tomorrow. If it does go sideways, I won't be overly concerned because as long as the short-term moving averages are expanding and going up, all is good. If this were to turn around violently and head through the bar, I would be massively concerned. So there you have it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.